Hey traders, John Fortune here with this week's weekly Forex Forecast. Hope everybody's having a fantastic weekend. We are entering a new month, a new quarter, and the second half of the year. And with that, we are likely to see some markets corrective, maybe even reversing or chopping around heading into next week. Because of that, I'm going to give you some additional information in today's video to help with any markets that reverse or pull back, additional entry opportunities that you can find next week. Okay, so a very brief look at the calendar coming up. We do have some ISM data coming out of the US, so this is going to be significant, something to pay attention to next week, services and manufacturing. We also have a bank holiday on the Tuesday out of the US. It is, of course, Independence Day. But the big pieces of data coming out next week, which you have to pay attention to, the Australian interest rate decision on Tuesday. So we're going to look at the ability to trade that, and I would advise trading after the interest rate decision if you don't want to take much risk on those trades, because as you get those interest rate decisions, you get volatility, and of course you get more opportunity with volatility, but you also get more risk. So the safer way to trade those, if you don't have a very strong bias on the event itself, is afterwards. And also on Friday, we have non-farm payrolls, of course, very important because everybody's looking to see if the US labor market is going to crack, which it inevitably will at some point because of where we are in the cycle. And as that happens, that will tip the US into a recession and of course will cause a global recession. Why? Because the US is the world's largest consumer. So the US doesn't go into a recession without the rest of the world going into a recession as well. Okay, so let's have a look at the scores for the coming week. And you can see there are some clear signals here from the scorecard in terms of markets to look for. The pound and the Canadian dollar are both projected to outperform. These are markets we should be looking at to the long side for buying opportunities. You can also look at Swiss franc and euro pairs. And to the short side, I do like the Japanese yen still as my favorite opportunity. However, it's very extended. It may snap back, especially as we head into a new month, a new quarter, a new year. And that's why we're going to be looking at additional entry points coming up this week as well in the Japanese yen. But I do still want to only be short the yen. So it's short yen or do nothing, short New Zealand or do nothing. And you can also look at short Aussie or do nothing. These are markets we're going to be looking at in today's video. So I primarily like pound yen to the upside. I like CAD yen to the upside for long opportunities. Franc yen to the upside we're going to look at. We're also going to look at Aussie CAD, Aussie franc and pound Aussie. But just remember the interest rate decision, because that is going to see the markets pretty much do nothing, and then you're going to get volatility from that event onwards. And we're also going to look at the New Zealand pairs, so versus the pound, primarily the CAD and also the Swiss franc going into next week. Okay, so let's have a quick look at the individual currencies before moving on to the markets this week. You can see that the dollar, which there's a saying, you get the dollar right, you get everything else right. But the dollar has just been moving sideways ever since we got this double bottom over here developing, because we reversed over here. We had a rally pullback. Now we're just consolidating. We haven't really gone very far in the last couple of weeks. And this has really seen a lack of opportunity in the Forex markets, because as the dollar has just consolidated, the other markets and the other currencies have not really moved very far, and they haven't really done much. They're just kind of chopping around, and there hasn't been as many opportunities in Forex over the last couple of weeks as a result of this. Now this will resolve itself, but how it resolves itself is yet to be seen. Are we going to come down, test 139, or are we going to start to break higher from here? So the scorecards are saying, you know, this is -1, it's bearish to neutral, so there are better markets to be trading heading into next week. Next is the euro. Just keeping tabs on this, you can see with the euro, we have this textbook head and shoulders developing. So again, you know, we're in this situation where we could go either way. We could break up and test the high, or we could sell off. Now, I know that's not a helpful thing to say necessarily, but it is the reality of that market condition. It's neutral. It's fairly neutral. However, relative to the other markets that we're looking at, it is projected in its 4-week rolling probability scores to outperform. So I do like euro pairs to the upside. You can look at those next week. We haven't added them in here because we've got a number of markets here that I like more. But you can look at euro long plays next week, euro yen, euro Aussie, euro New Zealand, as well as the markets that we're going to be looking at in today's video. Next is the pound. Now, technically speaking, the pound is making new highs, unlike the euro, which we had that kind of head and shoulders developing. In fact, we tested, so it's a textbook one because we tested the prior left shoulder like this, the head comes up a bit higher, and we're in this area. Whereas the pound is actually trending higher. So again, you know, we're in this situation where I am expecting this to roll over and for this breakout ultimately to fail. I've been saying this really since the beginning of the year. However, as it currently stands, and we've been trading, and this is why you can have an opinion, especially a longer term opinion, but trade a systematic process, because the scorecards have kept us on the right side of this pretty much all year. In fact, all year to the upside, we've been looking at pound longs as a main opportunity that's been coming up in the scorecards. So I do like pound longs once again going into next week, especially versus those weaker currencies in the scorecards. Next is the Swiss franc. We've continued to push higher. And again, all the way back at the beginning of the year, we bounced here, and I did say I'm looking for Swiss franc to come up to the 117 area. With this breakout over here, this momentum and this flag, I am looking for the Swiss franc to break high next week. So I really like franc versus the yen versus the New Zealand and the Australian dollar next week. Next is the yen. Now the yen has broken out with momentum of this consolidation, and I'm looking for the yen to come down to the low overall. This is something we've been highlighting really up in this area. We got bearish on the yen. The scorecards up here were projecting the yen to start to underperform. And it was really after that BOJ meeting where they came out and reaffirmed yield curve control that we started to see this accelerating. So I am looking for the downside. We may need to pull back first, and if we do get this pullback, this is an opportunity to look for shorts, and I'm going to show you in these markets where you can do that as well. Next is the CAD. Now the CAD has broken out above this high, and this is an area where I'm looking for the CAD to reverse lower. So you may be saying, well, why are you looking to be long the Canadian dollar if this is going to sell off? Because the scorecards are still projecting this to be one of the better markets to be long, so that is why I'm going to do it. Maybe we push a little bit higher, who knows? But technically speaking, we're still at that level we could reverse, and I am expecting this to probably coincide with the dollar rallying. Whether that is next week, we're probably going to see, because it's the start of a new month, new quarter, new half, we're probably going to see maybe even the dollar coming down a little bit more. You know, maybe the CAD pushes a bit higher, and then maybe a few weeks into the month, we start to see this rolling over. So near term, I'm still bullish on the CAD. Aussie dollar, I am still looking for the Aussie dollar down to this low, and I have been pretty much since we tested the high over here. And this year, I've been saying to you, I think we're coming down to these lows in these markets. However, ever since March, this has just been a horrible consolidation pattern, making new lows, new highs, new lows, new highs, new lows, new low, new high, and then we're pulling back. So we've got this expanded kind of megaphone or triangle pattern. And this is the worst type of price action you can encounter in a market. But going into next week, we have that interest rate decision, and that will dictate the opportunities in Aussie dollar next week. And really, you know, the scorecards are telling me I can either be short or do nothing. So I only want to be short Aussie franc, Aussie CAD, or pound Aussie given the opportunity next week. And finally, New Zealand dollar. Ever since we broke the major low down here, I mean, we are still trending down. This is a continuation. But again, like the Aussie dollar, it's been very, very choppy. And last week we bounced again. So I am looking for this to ultimately roll over still, take out this low over here, and also start to head down over to here towards the end of the year. Going into next week, I do favor New Zealand shorts once again. Yes, we're holding at the lows, but remember, you do not buy support in a downtrend. That is a very bad policy. Buying support in a downtrend is going to get you stopped out multiple times. You buy support in an uptrend. That's where you buy support. And this is a market which is at support trending down. And if that breaks, of course, the liquidation will be to the downside. So I'd much rather be short or do nothing in New Zealand dollar next week. Okay, so let's have a look at the markets then heading into next week, starting with crude oil. And crude oil has been a very choppy market ever since we had this kind of flash crash. I've been kind of neutral. I have been saying that there are better markets to trade, and I've been giving you both of these levels here as well, or these areas. And going into next week, I still only favor shorts in crude oil. I think there are better markets, but I only favor shorts. So I'm looking for two things going into next week. As the market pulls back, going to look for breakouts down towards the 67 area. However, if we continue to pull back and we do not reverse and we pull back into the 74 area, this is another place where you can start to look for short-term reversals and sell opportunities in this area. Next is pound yen. Now this is my favorite market heading into next week, and because we're starting the month, the quarter, and the second half of the year, we may see some reversals and some pullbacks in these markets. So I'm giving you both areas here so you can identify two potential opportunities heading into next week. I can only trade pound yen to the upside. I can be long or do nothing. Selling pound yen next week is not an option for me. Any pullback in this market is viewed as an opportunity to look for bullish breakouts up towards the 186 area. If we continue down and we do not reverse, we pull back into the 180 area, this is also an area you can start to look for short-term buying opportunities in this market. Next is CAD Yen. Going into next week, I can either be long or do nothing in CAD Yen. I'm looking for the market to correct, and if we can start to pull back and break out to the upside, I'm going to be looking up towards the 110.50. And if we continue down and we don't reverse, because very often these markets can just pull straight down, if we pull back into the 107.25 area, this is an area you can also look for a bounce in CAD Yen. And the third yen pair here is franc yen. Any pullback in this market is viewed as an opportunity to look for bullish reversals up towards the 163.25. If we continue down and we pull back into the 159 area, this is also a place you can start to look for buying opportunities for a short-term bounce or reversal in franc yen next week. Next is the Aussie pairs. Now the Aussie pairs are all from after the interest rate decision out of Australia next week. So I'm going to be leaving these until the interest rate decision. And once the interest rate decision comes out, I'm either going to be short Australian dollar or do nothing. So what that's going to look like is any pullback in this market, if we get a breakout on the interest rate decision like this with some momentum, I'm going to be looking for a pullback and a follow through into the 1.93 area. If instead we get the opposite and we get pound Aussie selling off into the 1.88 area, this is an area you could look to potentially fade that interest rate decision move, as long as the catalyst which pushed it to the downside is not too strong. If you get a very, very bearish catalyst, for example, if they came out and they smashed rates, by they I mean the RBA, up by 100 basis points, which they're not going to do, but just theoretically, if you had a very, very hawkish catalyst from the RBA and this sold off hard, you might want to question whether you actually want to step in front of that. I would suggest no. But if, for example, they come out with a consensus rate, then, you see this sell off, you might say, well, actually, I'm going to fade that in the 1.8825 area because there's no real reason for the market to have sold off or pushed down with any significance. Next is Aussie CAD. So the same principles apply here for all the Aussie pairs. I'm going to be looking for the market to pull back, and I'm looking for a sell-off down towards the 0.8720 area on the interest rate decision, and then looking for a pullback post interest rate decision for a follow through into this area. If we do not get this and instead we get that pulling back into, because we get that Aussie strength, then this is an area 0.8920. As long as the catalyst is not too hawkish, this would be an area I would be looking to potentially fade this market. And finally, Aussie franc. I'm going to be looking for a pullback in this market, and then of course a sell-off in the direction of the trend. I'm only looking to be short. Any pullback would be the opportunity to look for shorts down to the 0.588 area. If we get, again, the opposite and we get some Aussie strength, but it's not really merited, it's not really warranted, then what I'm going to be looking for is a potential opportunity to fade the interest rate decision for a short-term short opportunity in this market. Next is pound New Zealand. I can either be long or do nothing next week in this market. So any pullback is viewed as the opportunity to look for a bullish breakout to the upside. Going to be looking up towards the 2.0950 area. Or if we continue to trend down and we hold the trend and we hold the trend down in this area, this is an opportunity to look to buy the dip potentially in this market next week for a near-term bounce to the upside in this market. Next is New Zealand CAD. Now we've already pulled back, so any continued pullback is viewed as the opportunity to look for bearish reversal patterns, maybe a double top, maybe a head and shoulders. And if we get that, I'm going to be looking down towards the 0.8030 area. And of course, if we just continue to trend up into this area here without reversing, this would be an area I'd look for near-term short opportunities in this market next week. And the final New Zealand pair is New Zealand franc. We have a really nice bear flag setting up here. You see the breakout here with momentum, and now we're pulling back. So any pullback is viewed as an opportunity to look for a reversal in this market next week, down to the 0.54150. And again, if we just continue to pull back without reversing, and we trade into this area, this is going to be an opportunity to look to fade that move for a short-term short opportunity in New Zealand franc. And last but not least, we have euro dollar. Now, both of these markets are fairly evenly matched. The euro is actually projected to slightly outperform, but this is a market you can look to range trade essentially, because euro dollar is something we cover every single week, and it doesn't necessarily mean it's a fantastic buying or selling opportunity. If it's neutral and it just ranges, then you can range trade. So with euro dollar heading into next week, on balance, I would prefer long opportunities because the euro is slightly stronger in the scorecards, but you can actually look at potentially trading these both ways. So if we pull back into the 1.07850, this is an area you could look for a short-term bounce and a buying opportunity in the euro. And conversely, you can be reactive because that's what range trade opportunities are. You're being reactive if it pulls back into the high, the 1.10250 area. This is a place where you could actually look for a short-term sell opportunity in this market to the downside. However, on balance, I favor this if we can get it next week for a short-term move because the euro is scoring better than the dollar currently. Okay, so wrapping up with gold, silver and Bitcoin, starting with silver. Now, I do prefer shorts in both of these markets next week, but I think there are better markets to trade. These are not absolutely on the top of my list. Why? Because the dollar is bearish to neutral. And I really like shorts in gold and silver when the dollar is primarily strong. Now you might say, well, why are you bearish on these? Well, because as well, don't forget, yes, the dollar is bearish to neutral, but it did bottom in the scorecards. It actually has gone from weak to not as weak. And this is what usually precedes reversals in these markets. So I do on balance favor shorts, but I do think there are better markets to trade. Any pullback in this market next week is viewed as an opportunity to look for intra-week reversals into the 22 area, or if we pull back into the 2350, this is an area to start to look for a short-term reversal in silver. Next is gold. Now gold is also trending down, and I do like this for shorts next week. Any correction in this market is only for intra-week reversals to the downside into the 1880 area. Or if we pull all the way back and we test the 190.60 area, this is going to be an area also to look for short-term short opportunities in gold next week. And last but not least, we have Bitcoin. Bitcoin has got some strong momentum to the upside, and unlike gold and silver, I would be interested in long opportunities given the chance next week in Bitcoin. So any pullback in this market is viewed as an opportunity to look for intra-week reversals to the upside into the 3250 area. Or if we continue to trend down all the way into the 28,000 area, you can see there's a previous high over here as well. This is going to be a great area to look for a bounce and near-term long positions in Bitcoin next week.
So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities.